In our previous discussion, we provided an overview of income tax and explored various related topics. As mentioned earlier, income tax rules and regulations are subject to frequent changes. Therefore, we will aim to comprehend income tax at a broad level. In this session, we intend to explain specific income tax related subjects using relevant examples. Today, we'll take a closer look at the income tax computation sheet belonging to my friend and colleague. Rajendra Patil, our aim is to gain a deeper understanding of key concepts related to income tax. Rajendra works a regular job during the week and freelances on the weekends. He also has a home loan, investments, and various expenses, all of which could potentially reduce his taxable income, exemption, or deduction. Now, let's take a closer look at Rajendra's income. When it comes to income, the Income Tax Act of 1965 categorizes it into 5 different types. The first category is income from salary and pension. Mr. Rajendra's basic salary is rupees 7,50,000. He is entitled to a standard deduction of rupees 50,000 under section 16. Additionally, there is a profession tax deducted by the employer, which amounts of rupees 2,500. Therefore, the net income that is subject to tax under the income from salary category is rupees 6,97,500. Second income category is income from house property. If you receive rental income from a property you own, it is subject to taxation. This includes houses, buildings, office spaces, parking lots, or any other type of real estate. The tax is based on the annual property value for the current financial year. If you have a home loan, you can claim a tax exemption or deduction of up to rupees 2 lakhs. In Rajendra's situation, he paid rupees 2,09,411 towards his home loan, and according to the Income Tax Act, he is eligible for an exemption of up to rupees 2 lakhs. The third category income is income from business or profession. To begin with, let's clarify the distinction between business and profession. Business pertains to any economic activity carried out with the intention of making a profit. Economic activities encompass various endeavors such as trade, commerce, manufacturing, trading, or any other business-like activities. Profession, on the other hand, involves individuals providing services based on their expertise and knowledge. This category includes professions like chartered accountants, doctors, engineers, and others. Any profits and gains earned by a person in the context are subject to taxation under the income from business or profession category. In Mr. Rajendra's case, he also works as a freelancer. As indicated in the computation sheet, the net profit subject to taxation under this category amount to rupees 5,85,000. Fourth income category is income from capital gains like share market, investments, mutual funds, FD interests. If you take a look at Rajendra's computation sheet, you'll notice that he engaged in buying and selling stocks, resulting in short-term capital gain of rupees 3,091. This amount is subject to taxation at a rate of 15%, which comes out to rupees 463.65 that he needs to pay in taxes. Fifth income category is income from other sources like dividend, lottery, gifts. Rajendra received a total of rupees 28,302 in income from stock investment, dividends, and interest on fixed deposits during the last financial year. Income from all 5 categories is subject to taxation. Now, let's explore the possibilities of deductions or exemptions on taxable income under Section 80. Section 80C. Section 80C provides a range of investments and expenses that qualify for deductions. These include Public Provident Fund, Employees Provident Fund, 5-year post office time deposit, National Savings Certificate, Sukanya Samruddhi Scheme, Equity Linked Savings Scheme, and NABARD bonds. Additionally, one can claim deductions for payments made towards life insurance policies, tuition fees for children's education, repayment of the principal amount of a housing loan, and registration fees and stamp duty for a house property. The maximum limit for deductions available under this section is Rs 1,50,000. However, in Mr. Rajendra's case, as shown in the computation sheet, his total eligible investments under Section 80C amount to Rs 2,85,000. Nevertheless, the maximum deduction allowed under Section 80C is limited to 1,50,000. Section 80E. Section 80E provides deductions for any Indian citizen who take an education loan for themselves, their spouse, their children, or student for whom they are legal guardian. In Mr. Rajendra's case, he paid an interest of Rs 23,500 for pursuing higher education, for which he can claim a deduction under Section 80E. Section 80D. Expenses incurred on maintaining a health insurance policy are eligible for claims under Section 80D. In Mr. Rajendra's case, he paid Rs 55,000 for medical insurance for his parents whose age is about 60. However, the maximum deduction allowed in this category is limited to Rs 50,000. Additionally, he paid Rs 30,000 as insurance premium for himself and his spouse, whose age is not above 60, but the maximum deduction allowed in this case is limited to Rs 25,000. Therefore, the total deduction available to him under Section 80D is Rs 75,000, which is the sum of Rs 50,000 for his parents and Rs 25,000 for himself and his spouse. Section 80G. Deduction is allowed for amount paid by the taxpayer as donation to any fund or institution or charitable trust. All donations are not treated equally under Income Tax Act. Donations to certain funds and institutions qualify for 100% or 50% deduction without any qualifying limit. The applicable tax rate is determined based on your income category and is applied to the final taxable amount. This final taxable amount is calculated after considering all deductions and exemptions from your total income. The taxable income is equal to total income minus deduction minus exemption. Rajendra's total tax liability stands at 88,841 rupees. He has already made an advance tax payment of 67,000 rupees and paid an additional 21,841 rupees as a self-assessment tax. Consequently, there is no remaining tax amount owing Rajendra in this financial year.
Income tax computation with example. Let's see how much you have understood from above discussion on income tax computation. Question 1. List down the 5 categories of income tax under Income Tax Act. Answer. First, income from salary. Second, income from house property. Third, income from business or profession. Fourth, income from capital gains, share market investment, mutual funds, FD interest, etc. Fifth, income from other sources, dividend, lottery, gifts, etc. Question 2. If you currently have an active home loan, is it possible to qualify for a specific deductions or exemptions on your taxable income? Option A, yes. Option B, no. Answer, option A, yes. Please subscribe to our YouTube channel and hit a like button if you find this video helpful. Thanks for participating in the ArthShikshan initiative.